Alright, so what is going on, guys? Welcome to this week's recap and outlook video after a very eventful start to February, right? I'm going to recap just pretty much ES's price action with gold's beautiful price action, right? Topping at 1970 and literally trading almost 100 handles down. Absolutely beautiful. But the biggest part of it all was what drove, the gold sell-off. What was the narrative? How the narrative changed? And that's what I hope to recap pretty much with you guys in this video, right? First things off, we're going to kick off with ES. And the first thing that I'm going to talk about is FOMC, right? FOMC was, in my opinion, it started off as a mixed event. Why did it start off as a mixed event? It started off like that to me because, Powell, first of all, gave the dovish outlook, which was the 0.25, right? Sorry, the dovish hike, not the outlook. So he gave the 0.25, but then Powell was a bit hawkish in everything he said, right? Even though he acknowledged, inflation declining and everything, he still did not say, okay, this is the end. We're going to slow down the pace, right? We're going to stop hiking rates. That was not the narrative. The narrative was still that, rates were going to keep going up and we were going to still see pretty much, the same environment we've been seeing, right? Hikes after hikes. Even if it's 0.25, the Fed basically still said that they are going to keep hiking, right? So all of that, a lot of people took it as, let me not say a lot of people. A lot of people took the price action really as, okay, we're going to start trading price. The market built into the 4,200 level, which is, it's normal to see us trade in that range, right? Here's the thing. A lot of narrative changes, right, causes this type of movement. But this movement was actually all put in by, Vanna and Charm because it was an eventful and option expiration. I'm not going to go into pretty much Vanna and Charm. I think you guys should understand that if you've ever watched my videos, you've heard me talk about it before. Or if you were in my US 30 workshop, you pretty much, I explained all of this to you. But here's the thing. The market will do things that it will surprise you. And a lot of people don't seem to be able to adapt to that, right? They can't adapt to the market changing. They can't adapt to the market, wanting to trade up like how it did into the 4,200 level where they were expecting the market to trade 3,800. And the thing is that if you continue to be biased and you don't drive your bias into the session from data, right? You don't read the chart and make sure that it lines up with the chart, you will ultimately end up getting fucked, right? That's what we have just seen constantly with traders that can adapt to the market. And adapting to this scenario was by far the easiest one of it all, right? Because the Fed's narrative stuck to, right, the interest rate domination, right? The interest rates were going to continue up. So we ended up seeing pretty much the market rally and the dollar, it ended up catching some relief and then traded up into up from I think the 100 level into 102 that it is right now. And it was pretty crazy to see, DXY giving that, right? You can see right here into Thursday, right? This was the Fed meeting, obviously. And then you saw Thursday how it just built the stance. But all of this build translates into this absolutely crazy daily. Oh, my apologies. This always happens to me. And so this absolute crazy daily on gold, right? But then you have ES who has been trading for some time, par and par with the dollar, right? Not trading or reacting like that, right? Some people got shocked. It's earnings season. You don't gotta get shocked at that. You remember, there's other important events happening that's gonna dictate the future movement of the S&P 500. But gold and the dollar, those two are almost par and par, synced and synced, right? So the fact that we saw that price on these two, being so similar, I'm not shocked at it. The fact that we topped here, I'm not shocked at it. If you're, if you're in Simple Stocks or you just follow my Twitter handle, I had this in my outlook from last Sunday. I said that I would be comfortable if gold were to top at this zone just because of the accumulation that was being seen on the TPO, right? And if you look at gold, look at the accumulation right there. And I haven't gotten into ES because ES, it's going to be on its own thing, right? But I feel like instead of just jumping in, let me just get gold out of the way and speak of this accumulation that we started seeing, right? The accumulation was all leading into the FOMC announcement. You cannot tell me, right? Even if you look at this from a technical perspective, right? We are accumulating at highs, right? Are you going to long this, right? Or where's the risk and the reward? Long or short? The risk on reward was obviously short. There's no other questions about it, right? Because we were in such a pain spot. Looking at it from the weekly perspective, right? Come on, looking at it from a month perspective even. We sold off for about 7 months and then we just gained back all those 7 months in pretty much 3 candles, right? So we gained that as we were leading up into a potential, sentiment changing announcement, right? Like, you guys gotta look at these type of things, because these little spots that you use common sense in terms of your analysis are the spots that help you survive, the market, right? Instead of you buying into 1970, right? Or maybe you did buy, because I can't sit here and say that we weren't taking gold buys throughout the FOMC announcement. But once, the narrative came out, I said what I believed, right? I said everything plus the accumulation, everything added up into the recipe of disaster that it was. This, the gold in general trading almost 100 handles down. That was the recipe of disaster that I was looking for. So honestly, at this point, what do I want? I want to trade 1915, right? 1915. I want to trade 1915. You look at it on the chart, right? And we can even say, the 1900 level. That's fine. Let's give it the psychological number of the 1900. And let's also use the 1915 as any impulsive levels, right? I personally believe that if we were to get nice trading into those two levels, and we hold off on that Fed narrative being, rates still hiking up and the dollar, rebounding and gaining strength, we are going to see gold trade back into the 1600 levels, right? I am going to just say that out there. Anything that would cause a break over the 15s and trade back into the 70s and 2000s, I think it would all be geopolitical, fueled rallies, right? That will automatically, once the event comes out, it's going to get reversed. Same thing as the Ukraine war. So pretty much, that's really my stance on gold. It's really simple, right? For just in general, this let's call it this month, right? And in terms also on the week, I want to see 1900 and 1915 on GC, not XAU. On GC, the gold future symbol, I want to see those two levels get tested. If I see the first rejection in the 1900s, then I can assume we are going to start trading down into all of these zones, right? And to that 1842 level and so forth. So the more we see that right after a rejection, the more comfortable I'll be with price moving, right? If we just reverse this completely and trade back up, I believe the market's going to wait for the CPI report, right? Here's the thing. I have a bit of a different view on the CPI. I think the CPI report is going to start spiking again, and this is going to pretty much, make the Fed look good in terms of they didn't do premature, easing in terms of the rate hikes, because inflation is still, there. But the big thing of all of that is that Powell is saying that inflation in his eyes has peaked, right? So if we do see the narrative in terms of inflation continue to decline, then we're going to just have to start waiting for the next FOMC meeting, right? Here's the thing. We're going to see a bunch of news, economic data coming out. And if all of that continues to point into the Feds, doing their plan, then obviously we're going to wait until the FOMC. But if all of these news leading into, right, assuming we get a flat sort of normal CPI, no increase or nothing, and we just keep going into the data, we're going to still wait for that FOMC, because they want to see, the market participants, anybody in general, they want to see if the Fed is going to say, that's it, that's enough, we're going to get this over with, right? We're going to slow down now. But remember, if they were to even say that, they're looking pretty, shitty with what they had mentioned already to the start of, February. So that's my gold stance. I think it's pretty simple. Again, 1900, 1915, those two levels, right? I want to see rejections of them, right? Here's the thing. Impulses, they always happen. Remember, I always say this. The impulses of them will be that the level gets broken, but at the end of the day, it's going to get, traded back below. That's when you start looking at it as, okay, any impulses were faded out. Any weak hands were faded out completely, right? So that's how I like to look at price action. So let's go back to ES before we just stop, don't do ES and just end the video here, because I think with just the performance the gold did was more than enough for some people to even say, I'm not going to trade pretty much for like a good solid 3 months, because it was a pretty crazy last 2 days. I mean, 100 handles down almost. That is crazy. So looking at ES, we continue to build off earnings. We continue to do this. We are starting to top around the 4,200 level, right? This is also levels that you can see that this has been previous rejections in them. Even though this candle builds, impulses, that's how they always work. Impulses are the points where you see price actually break, but then it turns into a fake out because price, pretty much reverses. So if you were to look at that like this, right? If you were to draw a line there, at the end, price came back below that 41.75. So looking at ES, I want to see us trade into the 41.10 and the 40.90 level. I have been saying this since we pretty much rallied off, because there were thin order blocks from the TPO there that I pretty much just insist that we must trade those levels. If we were to trade those levels and they get held, right, I would assume that price is going to continue building back up. But if I see those levels get flushed like if they never existed, I would just say this right here, guys. I believe that we have topped if that is the case. If those thin blocks just get flushed like nothing, and then the narrative that I said of gold keeps going, we start seeing inflation go back up, right? That soft landing outlook just goes to shit completely. Then yeah, I would think that we're gonna trade into 3800s again and possibly, just head for that new yearly low, right? The thing is that when you look at the stock market, right, you remember there are bigger hands in play in terms of its movement, right? So since there are such bigger hands in play, you have to remember that when you look at any like economic meltdowns, right? If there's no sentiment pointing to an economic meltdown, you're not gonna see those washes that we were used to seeing, right? By washes, I mean these like days of selling, just wrecking, right? You got to remember that if the narrative starts shifting for whatever reason, then obviously we'll get the market back up. I am not saying that we're going to continue higher. I am not saying that we're going to go all the way to a new yearly low from here. But what I want to say from this point is to be smart with your decisions. Focus on the fundamental narrative that will be what builds the technical charts at the end of the day. Just look at what happened with FOMC and gold and the dollar's movement, right? Again, focus on the fundamental narrative. That will be your biggest guide into any bias that you will have. Not you and your little candlesticks, not you and your bullish baby haramis, those weird ass fucking candlesticks. None of that shit will be what will give you a concrete evidence of a bias that you should have for the market, right? So I think pretty much in terms of ES, I want to see us retest those levels that I just said. Again, 4110 and 4090. I want to see them retested if they get flushed out. I'm going to assume we're going to start trading into possibly a 3900 level, right? Obviously, we got to lose 4,000. But I think if they get bounced, then we're going to possibly try again to retest 4200 and see if we can either find some reload sellers there or price is just going to break out and continue higher. But as with everything, fundamentals must match up, right? So with all of that out of the way, I do want to talk about pretty much my XAU workshop coming up in March 6th. I want to say, guys, the XAU workshop, the whole point of it is just to explain to you and teach you all how I trade gold, right? You guys have called me, you guys have heard me call these levels, these scenarios, these things that they've actually, come true. And now I want to explain to you guys how I look for them. I'm not holding back in terms of any information because I feel like gold is not really that hard to trade, right? There's nothing really that I need to, take back and really let people just, no, you can't do this part yet. No, the TPO outlook of gold for me, if you know what TPO charts are, you could do the same thing, right? I'm not going to teach TPO and the XAU workshop because it's going to be way too long and it's not going to go with what I'm trying to teach, which is how to trade gold. Gold can be traded off candlesticks. Gold can be traded normal, right? You don't need all these TPO things. I use TPO because, again, as I said, market distribution. I'm looking at it from that point of view, right? But you don't really need it. You can trade gold just with the fundamental data and the candlesticks. That's what I'm going to teach in the workshop. So if any of you guys are looking to sign up, I am running a discount of 35% off. That is pretty much ending already after, pretty much today. So I will maybe do another special if anything, but again, it's not really something I'm looking at doing. The issue is that I personally believe that if you take this workshop, you will literally make your money back. To not say like, in a couple weeks just trading, gold. It's not that hard, guys. If you literally like show up, it will be worth your while. You will see that it is not so hard to trade this. Margin requirements, forget that. Like, forget all that shit. There's ways to trade it with little capital and still make a nice return, right? The key with gold is how consistently easy it is to read and trade. That's what I hope you guys will, pretty much learn from. And with that being said, I'm going to wrap this outlook here. And you guys, I just want you to know that we are getting into a really nicely technical market. It's trading very easy, and I hope that none of you guys are, too euphoric still from January. January was an easy market. A lot of people have never seen a bullish structure, right? The bullish structure was that the dips were getting bought and the market kept rising. Some people were not psychologically ready for that. I hope that they have cycled and are now going to go into any new rotations the market may have. If you don't know how to cycle into those new rotations, please, it's as little as just paying attention into any fundamental event that comes out, or just in general asking, right? you guys know how I am. I don't have a problem answering any questions. If you guys ever reach out to me in Simple Stacks or by DM in Discord or even Twitter, it doesn't matter. I'm always here for you guys. So I really hope you all can take advantage of the market, you know, that we're gonna start seeing pretty much into the option expiration of March, the quad witching, and I think it's gonna be a very, very fun one, guys. So have a great weekend and let's have a great session.